if these 529 plans are so great, if they offer so much of an advantage, then why is there so much debt still owed? Is it because people didn't plan ahead? Is it because they weren't able to put enough in? Is it because maybe that money didn't grow enough, or when they took money out, maybe it wasn't worth as much as they thought it was going to be? When we're looking at a better way, it's really common. So an easy way to do it is you start one of these specially engineered whole life policies. Just suppose you started the policy with something simple, maybe a couple $1,000s a year. Maybe it's $5,000 a year. Let's use that as a benchmark. It doesn't have to be that much. It can be more than that. It can be less than that. But by the time they're 18, building it conservatively for their growth, they're going to have nearly $100,000, like $98,000 plus in tax-free money that's accessible for whatever they want, whether it's tuition, housing, or even if they decide not to go to college. Right? We have personal experience with that, and we're going to talk about it.
Hello, Money Multipliers, and welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So I'm introducing something new to the channel. Here at the Money Multiplier, we have quite a few money mentors who are out there doing their own podcasts, traveling and speaking on the road, on live stages, taking strategy calls. You may have been introduced to Brian Faust, Mike Samet, and Jason Sipple, and that is who's going to be leading today's podcast episode is Jason and his wife, Patty. I'm going to start bringing in money mentors, and I want y'all to hear from their truth, from their heart of how infinite banking has really impacted them and what they've been doing using their policies. And specifically in today's episode, how Jason and Patty have been using their policies for their children, because you don't have to go into a boatload of student loan debt just to get yourself a college education or your child a college education. I can tell you, and I've shared this story before on the podcast, but it's been some time. My grandpa had 529 plans for myself, my younger brother, and then my cousin. And I dropped out of college, and I noticed that my 529 plan, when I was looking at these other schools, specifically SCAD, Savannah College of Art and Design, this 529 plan wouldn't pay for it. My brother, he went the unconventional route of going through private lessons to get his pilot's license, and that 529 plan wouldn't fund for it. So I know that a lot of people aren't familiar with utilizing whole life insurance in this capacity. And a lot of y'all probably found my podcast and this channel from going down deep rabbit hole searches, talking to ChatGPT, and just having suggested videos maybe pop up on the sidebar of your YouTube channel. So I know this is very unconventional, but I'm telling y'all, when you really start to understand the control of the money, getting out of government-sponsored plans, just all of the freedom that you have when you are truly controlling the environment of where you're leaving your hard-earned money at. I mean, honestly, so I just got back from on the road. I was on the road for about 3.5 weeks. And when I was in St. Louis, I had two segments on live. It was their live station, Good Day St. Louis. And the first segment, went pretty normal, what I usually do when I'm teaching the parents how to talk to your kids about money. But then she actually invited me on to an hour-long broadcast session that they do. And, she told me the story about how that weekend, because it was a Monday when we met. So that past weekend, she was at the park with her child, and the ice cream truck shows up. And when she was standing there with her kid wanted an ice cream cone, and Bomb Pops, that sucker was $5. And she's like, oh my gosh, $5 for a freaking Bomb Pop? Holy crap. So obviously, right, the prices are going up. We all can feel that and understand that. But she was like, how do I really take this as a teaching moment for my child. And, you know, in our hour-long segment, we got into policies and why I store my wealth within my whole life insurance policies built for high immediate cash value. And so, you know, I gave her some suggestions of, you know, hey, son, instead of us buying this bomb pop here, get this. I could actually take this $5 and we could go and put it towards something that's more of value, something that you want to save up for. So would you rather do that? Or do you want this bomb pop here and not have the $5? So I know us when we're just learning this at older stages of our life and not like myself who has been around this since 8 years old. It's kind of a retraining your thinking. That's Nelson Nash's law is rule number 5, rethink your thinking. And so I just really encourage y'all to retrain your mindset, what you've been taught about money up to this point, because there's so many endless possibilities that you can utilize these policies for, and then training your child the habits to pay themselves back. How are you going to be doing that? What's your action plan, your business plan that you are deciding to do? So Jason and Patty are phenomenal people, phenomenal parents, and I think you're really going to appreciate some of their insights of how they are teaching their children that they don't have to go into a boatload of student loan debt just to go to college and fund for their education. So, as of this episode airs, we are 2 days out from the Denver Mastermind, and I'm just very excited to see all of you money multipliers out there. It's not too late. You can still go grab some tickets, themoneymultiplier.com/mastermind 2025. All right, let's get into the episode. Meet Jason and Patty.
College loan debts is one of the heaviest anchors that's weighing down and dragging down today's families. And strangely enough, it's the biggest financial asset of the US government. 34.6% of the US government's financial assets are the student loan debts that our kids and a lot of us still owe our great uncle. You, myself, can't be a coincidence. What do you think? Young adults are usually stepping into their life without even a job yet with 30, 60, even 100,000. Doctors, hundreds and hundreds of thousands of dollars of debt before they've even earned their real first paycheck. And the parents are often caught in the middle. I was having a conversation not long ago where a father was super proud his son had done college early on and had his associate's degree before he even got to college. Like, oh man, that saved us probably $80,000. Now, we're probably only going to owe like $80,000 because why? And he goes, I hope he gets a good paying job when he gets out. We're wanting to give parents, we want to give our children the best start in life, but we don't want them to mortgage a future to do it. So what we're going to explore today is what if there's an alternative way to funding and setting up our kids' success, their college success, without owing Uncle Sam, without using Section 529 of the U.S. tax code. Because everyone thinks, right? The first thing you think of, what was the first thing that we thought of when we started putting our boys into or preparing for their future?
It's saving for college.
Saving for college.
And look, searching, and that's what they recommend. Google recommends, or the financial advisor says 529.
529. And the plan's always, we want to start early. We want to start the plan as soon as possible, right? The earlier you start, like anything, the more it's going to grow and the more prepared you are. So it's one of the first, like you said, financial advisors, conventional financial wisdom tells us just get a 529 plan or get some kind of prepaid plan. And they do two things. They're either saving just for tuition or they're a savings account that's going to grow over time, right? And you pick how much you want to put in per year, per month, and they're limited, right?
Mm-hmm.
We had our own experience, and that's why we're here sharing this with all of the money multipliers out there listening to us, because we know that the key is starting early. We want to do it in a way where we're empowering our kids. We're setting them up for more success than we had. That was our goal.
Yes.
Going in is how do we set our boys up for a future that's going to be bigger and brighter than when we started or when we got out of college, but we wouldn't say when. I'm not going to say when since we went back. But from day one, you start putting money into these plans and you're deferring taxes. You're putting them someplace where if something else happens, guess what? Can you access the money?
Mm-mm.
No, right? The money's locked in there.
It's just
And
for that.
it's just for that.
Right.
It's got one job. It's being deferred. It's tied to the market to have it grow. And typically they are growing. And typically they're typically state-driven, state statutes that drives a 529. So depending on where you live in the country, you have different kind of plans
Right.
available. And they're all guided by the IRS. I was reading a document by the IRS earlier, just looking at some of the limitations. And we were wondering, well, what's a better way? What's a better way? And we're going to share what is a better way and how could you possibly have an alternative way that you actually have more control, you have more guarantees, and you have less restrictions.
Yes.
So if anyone's listening and says, man, can we have something that has more control, less restrictions, and more guarantees?
Yes, you can.
Do you think people want that?
Yes.
Yeah, I
Because
think
we wanted it and
we wanted
have to
that. That's it. We wanted that. And then by the time your kids are 17, 18, or if you have a Doogie Howser and they're 15 and they're going to college or starting college, they have a way that they can not only, fund their tuition, but they can fund other things that they might need when they're at school.
Yes.
It's not just for one thing.
Mhm.
And so this is how the infinite banking concept comes into play. This is how the specially engineered whole life policies, cash rich whole life policies from these mutually owned dividend paying companies that become your partner.
Mhm.
Do you want your partner? And the crazy thing, I said it right at the beginning, with the government the government has 92.2% of all student loan debts is owned by the government. Do you remember that I was telling you that the other
Yes.
day? And you were like, what, 92.2%? Is that really? Yeah, that means our government, with $1.8 trillion owed in student loan debt and going up every year, the government's banking on us going to school. We keep wondering, like, how can college keep costing more? Right? Like when I went through college, my education was 80 grand and that was with a half ride. And now it's almost 50 grand a year to go to the
Right.
school I graduated from.
Wow.
Right? So it'd be a $200,000 education in today's dollars. And we know every day our dollar becomes worth less and less. And so when you're looking at the traditional route, you're wondering, well, what if these 529 plans are so great, if they offer so much of an advantage, then why is there so much debt still owed?
Mhm.
Is it because people didn't plan ahead? Is it because they weren't able to put enough in? Is it because maybe that money didn't grow enough, or when they took money out, maybe it wasn't worth as much as they
Right.
thought it was going to be?
Right.
And I was looking at and built something just as an example, when we're looking at a better way, what if you just started, or like your kids' grandparents? A lot of times I'm working with grandparents who want to set up their grandkids for more success.
Mhm.
It's really common. So an easy way to do it is you start one of these specially engineered whole life policies. Just suppose you started the policy with something simple, maybe a couple $1,000s a year, maybe it's 5 grand a year. Let's use that as a benchmark. It doesn't have to be that much. It can be more than that. It can be less than that. But by the time they're 18, building it conservatively for their growth, they're going to have nearly $100,000, like $98,000 plus in tax-free money that's accessible for whatever they want, whether it's tuition, housing, or even if they decide not to go to college, right? We have personal experience with that, and we're going to talk about it because the flexibility is the key. The flexibility, and we want our kids' future to be brighter than ours. And when we decide from an early age, hey, they're going to college, they're going to play sports, they're going to do this, all those things are awesome. College education, the ability to go to college, the ability to build lifelong friendships, the ability to compete if you play sports, have that camaraderie, have that pride in your alma mater. There's all these great things about college and the college experience. I have some really great memories from college, but at the same time, you're asking someone like if anyone's listening, how many of you are actually doing what your degree is in?
I know a lot of people are not.
No,
Right.
no. Like, what are you doing? What your degree's in?
No.
No. And I'm not either, right? Like I have a degree, a bachelor in fine arts in medical illustration with some post-bachelor work and halfway through my MBA when I realized, wait a minute, I'm doing this for my ego and we're still paying on, the cost of thinking that you need more education to climb some corporate ladder that you might not even be attracted to.
Right.
Right? I mean, and so for our kids, we want to give them the choice or the ability to be curious, to explore what might be their path.
Right.
So when they get out of school, maybe they want to go do a mission trip.
Right.
Maybe they want to go serve, at a small village somewhere in Africa or South America or wherever, just
Right.
somewhere where they can go and spread some faith, some words, some help, maybe go help dig some, whatever it is.
Right. Or sometimes also they want to they're very successful at a business when they are 16, 17, and they need, money to create their business, and they don't have the money because the money is only for college. But imagine if your kid comes up with this amazing new software, right? Things like that, and you want to help him, but you say, sorry, son, the money's in the 529. If I take it out, we're going to have to pay this. But if it's in a policy, you say, yes, present me a business plan, tell me what's going to happen, and yes, son, I can help you. So that's the freedom of having infinite banking, right?
That's the freedom, is because there is no restrictions, because you're number one in line. Guess what? You are first, because when you're an owner of one of these policies that are especially engineered for your kid's future, you can do anything with it. Like, think of what we've set up for Connor, right? Like, we've set up a plan for Connor where it's set up with the first milestone being his car.
Right.
At 16 years old here in Florida, right? But before his car comes up, guess what? It's going to help teach him other things. It's going to help him. He started a business this year. He's 11, but he's got his business. He's got his first client,
right?
That's helping spread this. Not us, by the way. He's helping spread our client's business out there, get more traction in social media. So he wants to do more editing. So he's going to take his first loan once the business is up and he's starting to make income. And he's put his savings and his earnings from the different gigs that he does, whether it's pulling weeds or spring cleanup or editing stuff for us. Like, he knows that every time he gets paid, he has to do what? He has to save first. Then, right, he saves first, and then he can spend a little bit, and then he can share. And right now we have him saving more than 50%. And so over time that builds up, and we had him put that in to his existing policy.
But he has to create the money too. So he understands, like, he cannot just borrow it. First, he has to know how he's going to pay it back. And once we know, then he's going to be able to borrow from it. So that's how we teach him that money is just not something.
That's it. Well, we're teaching him how to be the banker.
Right.
And that is the emphasis that we're making here with a 529 plan. You're not borrowing from it for other things. So he's going to use it to buy the things, the computer, the headphones that he needs to do the editing, to be able to work on his business. And then he's going to have a plan to repay it. And the money always comes back to our family, and it keeps growing uninterrupted. It's compounding, and it's getting better every single day. And this is happening now before he goes to college. First car at 16, you pay it back. He has a plan. By the time he's 18, I think you look this up, he'll have $88,000 to $90,000, right?
Available.
In cash value to go to school if he goes to school.
Yeah. And he can pay back his college money for more things. So it's never going to end. He pays it back, and then he can borrow for more. So he always is going to have his money working, and he's going to be able to pay his college, whatever he wants. Some kids like to go to the dormitory. Some kids like to live with other friends. So there's going to be all that money available.
And it's not limited by whatever Uncle Sam, the rule book that Uncle Sam made, because they're limiting the ability to teach kids how to use money, how to respect money, how to pay the family system back, how to keep the money in our family, and how to create that from generation to generation, because all of a sudden the conversation is much different than just going to school. We're teaching them financial literacy at a young age.
Hey, Money Multipliers, just real quick, I wanted to pop in for a second and just remind y'all, we have the upcoming live mastermind event happening in Denver, Colorado, October 9, 10, and 11. Because I get it. I know times are so crazy right now, and we need to come together during these uncertain times and learn how to thrive as a community on the you and me level. So I want to see you down there. You can check out more info down below or check out the link, themoneymultiplier.com/mastermind 2025. All right, let's get into the episode.
And it breaks free from that traditional way of thinking where most Americans were like, okay, well, for my health, I'm going to put it in my HSA. For my kids' school, I'm going to put it in my 529. For my future, I'm going to put it in my 401k. For my rainy day fund, I'm going to put it in my high yield savings account. For this, I'm going to put it in this. All of a sudden, you have your money spread in all these buckets with all these different rules. And you're like, well, I have an emergency right now, but I have a whole bunch of money in my HSA, but I can't use it because it's not a medical emergency. Or with school, like, for our oldest, he didn't go to college, and a lot of kids don't go to college today. They see that maybe there's a better path. Maybe it's trade school. Maybe, like I said, maybe it's a year abroad. Maybe it is starting their own business. And like, I was talking to Connor about this yesterday. Think of Jimmy Donaldson, right? He is the most successful YouTuber in the history of the world. I mean, the guy at 16 years old, I think he decided he had that vision that I am going to be, Mr. Beast I'm talking about.
It's Jimmy.
Yeah, it's it. Jimmy is Mr. Beast. We watched his show and we've seen what the power of a big vision is. And imagine if Mr. Beast's parents set him up with a 529 and then he goes, Mom, Dad, this college thing, I think I'm going to do this YouTube thing instead. Right. And parents, if they're already stuck on an idea, like you're going to college, you're going to graduate, you're going to get your degree, you got to get good grades, you're very much teaching them how to think or what to think, right? You're telling them you got to be like this, you got to do this. You're putting a lot of restrictions on your kids. Right. And the truth is that's limiting because what worked 20 or 30 years ago to go into school, to get a degree, to get a good paying job, it's not the same today. Right. Like having a degree, there's so many, I love to have the statistic, but there's so many people that are, have master's degrees or doctorates that can't find work right now. Right. It doesn't mean that you're going to get a degree because truthfully, the way that you make money is you go out and you solve people's problems. And the bigger the problem is that you solve, or the more that you can solve harder problems, the more that your value rises, the more you're going to be able to earn. So like you said, what if your kid has some code or something they created that all of a sudden solves all of these problems for future generations, but the expectation, the money that's aside to maybe put down in the business or double down on their plan is going to be tied up in business. And so like with our oldest, right? Our oldest son, it was kind of funny. I called up now we did Florida prepaid, which means they can go to any Florida school, right? Mm-hmm. State school it doesn't pay. What does it not pay
tuition.
For?
Because
it pays tuition, but it doesn't
have their tuition.
Okay. So we had it covered for his tuition. Graduates high school from a great school here in Orlando and, probably could have went to a number of schools and just decided that wasn't his path. And we supported him. Right. And so we had the conversation like, well, what do we do now? We have thousands, tens of thousands of dollars in this account. What do we do with it? And so I called up and I spoke with the woman. She was super nice, but she's like, well, you have two choices. You can either transfer it within the next 10 years to a sibling. Right. And at that time, Connor was 7. Right. Yeah. Like maybe even less. Right. Yes. Right. He would have been less. He would have been 6 or 7 years old. And so they want him to go to college when he was 16 or 15. I'm like, we're dating ourselves, but I don't need Connor to be Doogie Howser. So I was like, well, what's our other option? She's like, well, you can take the money out and you can pay the taxes. Right. And that's what we did. That's what we did. And guess where we put it?
In our policy.
We put it in our policy because now.
Our first or the second?
In our first one. Hey, we put it in our first specially engineered whole life policy from a mutually owned company because We wanted the opportunity to grow for our family, and now we're supporting his journey to go to the military. We're able to support him with a coach, with the help he needs, with the different skills he wants, because
Right.
we're using the money that we put in there that has grown uninterrupted and compounding since we made that decision 3 years ago.
Right.
And now it's not only protecting their future because it's protecting my body,
Right.
right? So my body's protected, it's on me, and he sees how the system works, and now he wants one too,
Right.
right?
Mhm.
What's he walk up, mom, dad, is it time for me to start yet?
Right.
And what do we tell him?
Not yet.
Not yet, almost.
Almost.
Almost. You're showing us the discipline, you're showing us that you want this, but he knows that this is a better way to keep the money in the family and keep control of what's going on. And it's a legacy like we're talking about that goes beyond college, beyond like we're saying, it goes beyond just the education problem. It teaches our kids money from an early age. They learn the power of capital, the value of discipline, and the freedom that comes from controlling your own banking system.
Right.
All the time you hear me talking to families, and I remind them that, hey, we're not just buying life insurance, we're building a financial foundation that can be passed on from generation to generation. And that's the knowledge, the systems, the processes that we're talking about.
Right.
And the whole life policy is that's designed for infinite banking. It's just one of the few tools that can educate, it can empower, and enriches your children all at once.
And at the same time, is the freedom that your child has to know that if he doesn't want to go to college, it's going to be okay because you own your own bank and you can decide what to do. There's not that pressure for kids to say, oh, my parents have paid for a 529 since I was born and I have to go to college. Imagine the pressure that we already put on our kids.
Yes.
We're like, you have the 529, you have to go to college and you have to do this.
Yeah, you'd be like, Jimmy, why did you get an F? You know how hard we are working to put money into your 529 plan so you can go to school, and you start putting pressure and restrictions and you expect expectations.
Yes, and Connor he's like, sometimes he wants to go to college, sometimes he doesn't want to do, but he says freely because he knows the money is there for whatever he's gonna want to do it. And that's how you let your kids have the freedom to decide what they want. And on top of that, like you said, they start understanding what it is to have control of your money. Because the 529 tells us they control the money. So, son, you have to do what they say, because if not, the money is not going to work. It's not going to be used for this. But what we're teaching Connor, as long as you take control of your money by using the infinite banking concept, you will be able to do whatever you want to with the money.
And you have Uncle Sam, Uncle Sam's doing this. Dollar, dollar, dollar. Yeah, let it come in. It's raining money. Bring me the money, people. Bring Connor, go to school. Keep paying your uncle.
Right.
Pay your uncle. We're still paying Uncle Sam.
Yeah.
With a degree I'm not using and didn't finish, and I had a 4.0. You had a 4.0 graduating with your MBA. And guess what? We're building a business that serves people, and we're doing it to teach them this.
Right.
We stand for freedom. We stand for choice. We stand for the ability to believe in something bigger, to have faith in yourself, to have love for yourself, to know that you can go forward with confidence, opportunity, financial security, all the things without feeling that pressure.
Right.
Pressure does make diamonds, but it's pressure that you're passionate about, not the pressure that your parents are putting on you. Right?
Mm-hmm.
Like we know when to push our kids and then when to let them grow. When to push them, when to let them grow. And when you're setting these restrictions from an early age, now 529s, they're amazing because you're thinking already about the future,
Right.
which is the biggest blessing to any family is start planning, basically plan as if you're going to live forever. And then live today as if it's your last, right? So you really want to have that duality of being present, but planning and having a big vision. And so if you're using a 529, that's awesome.
Right.
There's nothing wrong with it. We're just saying that you're restricting yourselves, and there's going to be penalties if you don't use it for that. It might not be as good as you think it's going to be. You might be restricted on how much you're putting in there because it is an IRS guided problem. And it's our government's biggest asset. So guided by the IRS, government's biggest asset, is that a coincidence? I really don't know. Like, I don't know for sure, but it kind of seems like they go hand in hand. So why not have it be privatized? Why not have it in your family? And why not, if they do go to college, they take a loan from your family bank?
Right.
There's a good story of someone that's a third generational banker that I heard. And we're going to wrap this up here in a moment. But a third generational banker, and he remembers being in college, and now his family has 70 policies and roughly, the whole trust system set up, the Rockefeller waterfall method, and they have about $156 million in their policies.
Right.
And when he was in school, he had his friend, his roommate was going down to the bursar's office. And he's like, "What's that for?" And he's like, "Well, I'm going to sign for my student loan, my federal student loan." And his friend was like, "Well, why are you doing that? Don't you have a family bank?"
Right.
Because he just thought everybody was normal, that everybody had a family bank. And his friend's like, "A family bank? Like, what the heck are you talking about?" And then, the guy with the family bank went back and talked to his parents. He's like, "Why am I paying us back at 11%?
Right.
My friend's getting a loan here for like 3.5%."
Paying
Yeah,
them,
and
right.
paying them. But the thing is you're always paying their family. You're always paying your uncle, so your uncle can go party. No, you want to teach your kids, even if you charge them a little bit more, let's keep it in our family.
Mm-hmm. It's for us.
Let's keep it in our family. And so, to take this home, the bottom line is that college doesn't have to be crushing or mean crushing debt. You can prepare for tomorrow's expenses with a system that puts you in control, especially if you start early, you fund consistently, and you use your specially engineered infinite banking policy to build that education fund that works whether your child chooses college, trade school, or another path altogether. Instead of you sending your kid into adulthood with a noose or a ball and chain of debt, owing this Uncle Sam character for decades, imagine setting them forward with confidence, opportunity, and financial security.
And here at the Money Multiplier, we can show you all that. Jason and all his peers will be able to show you how to set up for your kids, because maybe you're wondering, how do you do it, right?
That's it. I didn't even think of that. That is true. This is the conversations we're having on a daily basis.
How do you do this?
If you want to know how you can own this, how you can get your kids or grandkids started, have that conversation with us. Click in the link here and make that, or that's my call to action, is to take action. Don't wait. Explore, train yourself, go make the call, come up with a plan to fund that future that doesn't restrict you. And guess what? If you use it for college, it will still grow with you after you paid it back. And you can use it for the next thing, the first house, the first investment, the first wedding, or maybe the only wedding, or whatever else comes up. So more than anything, go learn, see that there's a better path forward without owing Uncle Sam so much money, and don't hesitate to get started today with a conversation with a certified infinite banking practitioner from the Money Multiplier.
Very important, because other people are not trained the way. Here at the Money Multiplier, everybody's trained.
That's it. All right. Well, be blessed, y'all. We appreciate you are in the small percentage of the 5% being with us here today. So we appreciate your time, your energy, and make sure that you've made notes and you've taken some action steps from this, because there is an alternative way to using a 529 that'll put you in control, give you more guarantees, and last as a partner far beyond when you actually go to college.
Yes.
Take care. Thank you all.
Hey y'all, thanks for tuning in. If you enjoyed this content, click right here and it will take you to last week's podcast episode. I will see all of you beautiful money multipliers next week. See you then.